Me again. Then this is Observations with Otsu. I want to apologize for the pause I had last week. I did make an observations video, I believe, but I did not make a coffee video. I was sick over the holidays and I was recuperating, so I had to do a lot of catch up last week, and so my free videos got delayed. You guys were well aware of all the price action that happened. It was a terrible week for me to miss. But a lot of things I did cover before, and I had been covering in November and December. We can kind of go over that. And so I didn't miss much in terms of real time analysis because I was already prepared for this. In fact, despite the fact how busy I was, my portfolio made 80% last week, and that was probably one of the best 1 weeks that I've had in 2 years. So, and this is just the beginning, possibly. We'll look at these scenarios. We'll look at how bullish this actually is. We're going to do things a little bit differently. Look at how bullish of a scenario this could be and what kind of options we have. We can also see if you're more bearish, because I don't want to exclude any one party. I want to be objective, as well as give you my personal angle and thoughts. And so I'm going to look at some bearish thoughts as well. And I'm right now about, I was about 90% sure that this was the bottom, and now I'm looking at maybe about 95% sure, even closer to 98. But I'm not going to be bullheaded with that either. I'm going to be respectable that things can change instantly, and this is a market that can change instantly. During the 65,000 range and higher, people were completely euphoric, not even realizing that the it was a glass ceiling, right? And within 2 weeks to 1 month, we started our decline, and so that's what I want to keep in mind, because this can change in any direction at any time. And so, like I said, I tend to go a little more bullish on this. We're going to look at the usual. We're going to look at the total market cap, Bitcoin, Ethereum. Look at the bullish bearish theses. I don't know what the plural of thesis is, actually. And then we'll look at some altcoins, maybe some top performers, maybe some AI. We'll kind of mesh that out as well. But a lot of that I'm going to reserve for the coffee videos on Wednesday. Speaking of coffee video, I actually just got a 6-pound delivery of coffee today from my favorite coffee place called Onyx Coffee. And so it is going to be a little bit different for a coffee video as well. In addition, I'm excited to open up those coffee beans. In addition to that, I'm offering 3 new videos, and this is going to be where I kind of launch a whole new chapter of content. And I posted it on Twitter yesterday. One video is going to be called Education with Otsu. So the observations with Otsu will be just casual technical analysis. This will be education based, so it's going to be more scripted, more textbooky in that regard. So you can kind of see if you're new to even things like support and resistances. There's a lot of good support and resistance content out there, by the way, that I'm not treading new ground with that. But if you want to see my take on that, we can do that. We can look at Aroon. A lot of you guys follow me because of Aroon. And that's something that I want to be known for over time. So that'll be in there as well. And just different kind of application strategies. Another thing is going to be, it's called hot take trading. And we'll see how this goes. This was the least of the 3, but it's going to show a little more aggressive takes on the markets. For example, some people, and part of this started because I had someone just complain to me about my analysis. And I'm like, well, screw you. This has worked for me. And so the whole concept of that video is just going to be like, if you don't like the video, if you don't like the content in that video series, then you can just go away in that sense. So I'm going to be a little more hot takey aggressive with that. Not aggressive in a bad sense, but just like I'm going to share my more deeper thoughts that are going to be controversial to people. Not controversial necessarily as terrible, but just like there's analysis in general. There's a lot of parts that people agree with, but for the most part, it's so subjective in many ways. And so that hot take trading series is going to be, this is why I trade the way I do, and this is why I agree or disagree with methods. So a lot of people did not consider this. I had one person in particular just like really rage at me about this, that this was not a valid divergence here, this rather. This is not. This is MVRV. This is a RSI, and so a lot of people did disagree with me on this. On even though that this was a higher low, that this did not count as a divergence because the angle was not angly enough, and that is bullcrap, in my strict opinion. It is an opinion and it is subjective, but it is something that I've back tested very thoroughly, and mathematically is what is important. It doesn't necessarily matter the angle, and so if if that rubs you the wrong way, then you're not going to like my hot trading videos. So and if it does, then I apologize for this video, right? Because that's not the point of these videos, but it's going to be one of those hot takes where I look at analysis. I think there was another one today that I looked at. People prefer like this current method of trading, right? Like people don't consider this any sort of bull run or even a bottom, quote unquote. Like, or they're not even trading because they want to see like a higher high out of this market, and versus like a reclaim. And I personally don't agree with that. I'll have more stronger opinions about that as that video takes shape. But the idea is like, where do you consider a higher low? I mean, this would be considered a higher low in my opinion. And so we're going to check that out. We're going to compare higher lows. We're going to look at the idea of higher highs, higher lows, and all that kind of BS. And then we're going to look at reclaim levels and see. We'll compare them, and we'll do a detailed comparison. See which ones are good, see which ones are not good, and we'll just kind of play that by ear. And the thing is, I'm open for me to be wrong, and I think you should be as a trader to always assume you might be wrong. But that is something that we'll just take a look at. And so again, those are the type of subjects that are going to be involved in that. Like, are reclaims really worth checking out? Are higher lows and higher highs, are they just prestidigitation, or is it something that actually matters? And again, all this stems from the fact that a lot of trading is subjective, and so one person will translate X as one way, and the other person will translate X as a different way. And sometimes they're both right is the thing. So we'll play that out. Anyway, that's the second one. I don't know how well it's going to go. Like I said, that was probably the least of the favorable videos. And then the last one's going to just be like 3 to 5 minute, maybe even 7 minute videos on Twitter. Because part of Twitter Blue lets you upload up to 2 gigabytes of video data, up to, I think, 1080 resolution. So that's pretty good. And so I went ahead and tested it. If you saw my video a couple days ago, that was me just testing that out, and it worked. It was about 7.5 minutes. A little long, but I think it's a good, it got good reviews. You guys gave me good engagement with that, and I got good feedback from that. So I think I'm going to keep doing that. I think I'm going to aim right around 5 minutes. It might just be one, I might just do one coin in particular, and we can kind of go from there. But yeah, those are the 3 videos. Now that I'm on this topic, I didn't mean to go this long, but now that I'm on the topic, I got a lot actually covered in store for 2023, and I'm very excited to share it. So as far as free content, I'm going to have, as you know, I have my Otsu House Telegram. If you're in there, stay tuned for more content. But if you're not in there, go ahead and check out the description, and I'll have it there. It's also on my pinned tweet on Twitter if I happen to not apply it on my description. But it is a channel that I focus on a little more detailed and personal thoughts about the market. And I try to focus on good content in there versus frequency. So if you're expecting a lot of content, it might not be suited for you. But it is going to be focused on, again, on more personalized, quality-based content. Usually I cover a lot of trends, like deeper market thoughts. And a lot of it's been related to like FOMC events and things like that. And I've been very vocal in that Telegram about why I think FOMC and CPIs were just not effective. And so far they've proven to not be that effective over time, And so as the time goes on, we get used to it. And as we get used to it, it's priced in basically. So that's kind of a sample size, but I do share a lot of charts there. that only share to those people. And so that's one of them. And another one that I have is a newsletter that's on my Twitter profile, um, and I don't have any subscribers yet. It hasn't had too many issues, but if you do want to go in there, that's probably where I'm going to start putting like major updates and discounts for like paid content that I'll be doing. So that's worth checking out as well. Also, the integration for Twitter I think is called Review, and I think they're actually getting rid of that. So I'm not sure how they're going to. I'm not sure if Twitter newsletters are dead, basically. We'll see. That's going to happen, I think, at the end of this month. I'm going to have two more free. I'm going to have two free bots as well, and one of them is just going to be. I think both of them in general are going to be either, the only requirements are that you follow me or you sign up for my ref link, something like. It's going to be something very basic. And so those are going to be Aroon specific bots, and those are going to be kind of either Apex bots or something else. And so speaking of Apex bot, I'm going into kind of the paid realm, and I know that's kind of a cliche for most people, but I have a lot of things. I got Apex Academy, which is a 12-week education course. It's been very successful in that regard. A lot of people are leveling up their trading. I got one guy in there that I've been talking to all day today, and this guy is just completely on fire, and he's done better now than he's probably done in the past 2 years. So this is like, it's something like, it is a little pricey. It's $540 for 12 weeks though. So it averages about $45 a week. So that is a little on the pricier side, but you get so much content. You have no idea what you're missing. I can't even translate to you how much it is. It's like over 50 hours. I think about 54, 56 hours of video. We have 5 videos a week, 6 videos a week. We have 4 trading bots in there. We have active mentorship. We have active questions. We have homework. We have charts, lots of charts. We've done over 100% performance already with just the Apex bot alone. We're looking at about 115R right now for the first 7 weeks. Got 5 weeks left. If you do sign up now, you can if you want to. If you do sign up now, and I won't discourage it, but if you do, you get access to all the previous weeks as well. And so that's a good thing. By the end of these 12 weeks, I'm going to launch it again, probably in the beginning of April. So, or maybe mid-March or so, depending on when the last of the 12 weeks are for this one. And that's going to be, I'm going to offer it again. It's going to be a little bit cheaper this time because a lot of the materials I'm already going to have up front, but it's also it's going to be more advantageous as well. So it's not going to be any better or worse than the current one. It's just like, I think it's going to be this is the first iteration of that, right? So this next one will be a little more polished in that regard. Current members also get a very big discount on my 4 Aroon bots that are going to be coming up. And those are the only people that are going to get it. So that is a benefit. If you sign up now, you'll get lifetime discounts for all my Aroon content. And so the 4 bots in particular, it's going to be called the Aroon Pro and the Aroon Pro Suite. And so I'm going to have a website called aroonpro.com, and I'm going to cover that. And so one of them is going to be the Apex bot. One of them is going to be the liquidity script. Another one's going to be the trend script, and the other one is a volume-based script. And so we can go ahead and kind of look at this. And if I look at the Apex indicator right now, it gave me a buy signal right here. And so this is one thing to keep in mind. This is one reason why I got in so early. My liquidity script, it gave me 3 buys here actually. And so my entry level was here. And so you can see these 2 little lines. One line is going to be the entry, so like right here, and then the other one is a take profit, which is right there. So you can see by that red dotted line. Let me get rid of this just to verify that. Yes, so that stays. So that is the stop loss area. So if we kind of analyze this and move it over here, go ahead and string it up. That would have been 19R just for Bitcoin alone. And so this is why I'm not kidding you when I say that I got 115, 120R. So This has been a very profitable application. A lot of people have made their money back in from their fees. If you even if you put $3,000 towards my bots, you would have gotten your money back by now, and you still have 6 more weeks to go. So that's the importance of that. So anyway, those bots are going to be automated and put onto the AroonPro.com suite, and so there's going to be a mix of them. Right now, I cover about 20 to 30 coins. By the time it's finished, I'm going to have about 50 to 60 coins, and you're going to have options whether you want to be a scalp trader or swing trader. You'll have different options and time frames and coins to work from. You can add packages, things like that. So I'm very excited about that. I got a lot of other stuff going on, but I'm taking too much time to explain that. But it's I'm very excited for this year. I have lots of people asking me for stuff. This is lots of free content and paid content as well, but you get the idea. So, all right, so we're gonna get rid of this. Don't want to reveal everything to you guys. We're gonna go ahead and go to for observations. We tend to go to the weekly, and we'll kind of zoom this in, get rid of all this stuff. Sure, I'll draw that again, and go to the total market cap as usual. Already have a drawing out here. I guess we can kind of keep this up. As you know, weekly was bullish. One of the most bullish candles that we've had for a long time. The bullish one previously was right around here, and it was during the bear market. And so this is a good thing. This is a good analysis to consider, because this formation here, like right here, was a good pattern in comparison to like right here. And so there's a little bit of a similarity for multiple reasons. But overall, we had the breakdown. We had the retest of that breakdown. Went slightly lower, so sort of a spring-ish scenario. Broke above that, and then we went ahead and deviated below. Your sign for this one would have been this right here. It broke above, it caused a new high, and then deviated below. So that's a good sign to cancel your longs in that case. I believe I was long at this. I was long here, and I was long here, and I'm long here. And it happens. Look, this is only 3 times right now. I'll do this for years, and one day I'm going to be right, so it's not going to matter, right? So the whole important thing is to making money, not being right. And so this happens so few times in a complete market cycle that I'm okay with that. It happens like 5 times at the most. So anyway, your run up, you had the higher high. That's one reason I'm not too considerate of higher highs as confluence points. But then we had the deviation. Here we kind of got the same thing, pushed down, sort of a retest. This is actually more of a spring scenario. This one isn't here. It's very, very close. It is more prevalent on Bitcoin, but now we got the push up. No higher high as yet, and so that's where the difference kind of ends. But overall, still relatively similar. As you can see, I had the falling wedge placed into perspective. Had the run up. These were the previous, I think, the daily time frame levels. But we're pushing ahead for now. As you guys know, this is probably the place to clear. And so this brings up a good discussion about the higher highs, because is this a higher high? Because then what about this? And if we don't include this, then we got to go here. Well, then what about this higher high? And so you got 3 sets of highs here. And so where do you stop with that analysis? And anyway, I'll digress, but that's kind of the MO that I'm looking at. Aroon is under a bullish consolidation. That means we should continue to see normal price action. This here was just a bunch of just nothing as far as like bullishness. Once we got to this line, when these become parallel, that's when the price starts to move much more in line of bullishness, and we have. So this is the start of the bear trend, which means the bear price action is the trend. The bull price action is the sub-trend. And so with the sub-trend, there are times when the sub-trend is actually more important than the trend, and that's when consolidation occurs. And so we have started that consolidation. As long as these two are parallel, this will play out that way. In fact, in many cases, this is one reason you do see deviations, because if it goes too high, then this will come bullish, and then it'll look then the bears will have a chance to consolidate and cause a rise in bearish trend. So that's kind of how the Aroon works. It's a little tricky, but it kind of lets you see things. RSI is right at the 50 range. We want to break that. Otherwise, nothing else to see on the weekly. It is on the. I'll just briefly show this on the weekly. It is broken above on the 50 on Bitcoin. So that's worth telling. Should we look at the total or should we look at the Bitcoin? Again, this is where I think that the total market cap does have limitations, and these are one of these limitations. But overall, that just tells me that Bitcoin is stronger than altcoins right now, which is no surprise in a bear market. So daily, we can see the push up. We can kind of see this playing out in real time. So this would probably look somewhere like this if you want to look at actual pure price action. We do also have this range. This is a swing low order block, and so we can kind of look at this as well. And this is one reason we're getting kind of some contention, because really the resistance is right here, but we're having some sub resistance already. And so right now we're just kind of fighting for this range, and this is one of the reason I think that we might get some sort of range attempt like in this range just to get people to be tricked into longing and shorting. And so typically when we get this kind of a high of a trend, or we kind of just, or even something like this, when we have the downtrend and we have all this, it's fighting for another supply or demand. And so that's where we run into these kind of scenarios. We have like a range attempt right here. So this is kind of what this looks like, and we'll just get rid of all this stuff. We'll get rid of everything here. So depending on how, so if we do this from this angle, we did have a higher high, and then we had, technically we had this, but we had 2 rejections so far. Again, this is total market cap, so take it with a grain of salt. But this is how we can view this. Not quite the break that we're looking for. This could end up being, this also looks like it could be a distribution pattern, and if we go above this high and we deviate below, I think we could see a target back down here. All right, so we are going to take a look at Bitcoin now. We're going to start with a 2-week. We have a few things here. I want to notice this is the wedge that I was looking at before. This was the divergence that I was also looking at, which was a valid divergence, and it gave us a good signal with that. I've been very, very, very vocal. If you haven't been vocal, if you haven't heard me talk about this buy signal, you probably haven't watched too many of my videos. But we had a buy signal here. I also mentioned the sell signal that we had basically at the top, not quite the Pico top, but very, very close. I think we had this on a different time frame. We also had a 3-day bearish divergence on this level as well. And I keep mentioning this because these macro moves really, really, really matter. They really do. And I know it's so easy to short right now and to think that it's not. I don't want to buy because I'm waiting for 10K. I'm waiting for 5, whatever K that is. But I'm telling you, the bear market will keep you in the mind. It's designed to keep you in the mindset that you can bid lower and lower and lower and lower. So it's usually one of 2 things. It's either I'm too scared to buy here, or I'm not scared to buy, but I want to buy lower first. And both of those things are actually the same, because it's kind of a flawed perspective. Is like, well, obviously we all know being too afraid to buy here is a reasonable thing. Like I think everybody at one point in their trading life has been afraid to buy, or not been afraid to buy, and that's usually up here. Nobody was afraid to sell. Everybody was afraid to sell here. A lot of people were afraid to buy. I know people that did. And then look what happened, right? So now we have the inverse of this, and people are not really up to buying. And so, like, obviously that's more of a newer application. If you're new and that happened to you, that's not a flag. That's an encouragement to know that everybody has been through that, right? So you're not experiencing anything that's new. You're not a loser in that regard, nothing like that, right? So you can always improve yourself. So with that being said, the other thing is like, well, I want to buy. I'm not afraid to buy, but I want to buy lower. And then you get the low. Well, I want to buy lower. So that's the thing. Like, most people, I've been in this space since 2017, been in stocks longer than that. One thing that tends to happen is that when people get the things, they look for something like outrageous, like, oh, if I get this, I'm gonna buy it. Like up at 60K, people are like, oh, I wouldn't it be great to be able to buy Bitcoin back at 20,000 again? Well, now you had your chance, and most people didn't take that. Okay, I took it because regardless of how I feel about that, and your feelings should be kept aside, this is still right now at 21,200 is a very historic low in comparison to what we have seen and what we might see in the future. So we need to be considerate of that. I really think that we should. So that's one reason I bought at 16.5. I once we got to 20,000, I didn't do well with my DCA. In fact, I didn't really even. Yeah, I knew we had gone down here, right? And so on this run up, I sold all of it right around this area. Actually, I did not DCA until we started to get below here because I knew once we got to halfway, all right, now it's time to start building a little bit of a portfolio. And so I started doing it, and I bought a considerable amount at 16.5, and honestly, that was a really good. I did not intend to. I think I bought actually because of the buy signal. So the buy signal was at 16.8. So I'm pretty sure I bought in this candle right here. And so that's because I use my methods. Like when I tell you guys things, when I talk to you guys about my bots and stuff, like I personally use them. People are very, very, very surprised that I use my own bots. Well, why wouldn't I? Why wouldn't anybody? If someone's trying to sell you a bot or a plan or a program and they're not doing it themselves, it's more likely that you are the product. They are benefiting off of your membership fees or something like that. I'm not saying it's wrong to have a paid plan, right? I've got one. I'm planning to have like 5. So it's not like I'm not saying you can't do that, but this is a way to tell you guys like, hey, I'm involved in this myself. I personally trade these. In the Apex Academy, I've got a $5,000 portfolio that I have traded in there since day one. And so I actively trade the bots. I do. So whenever a trade gets posted, usually within the hour, it shows up as what the asset is. Let's say Bitcoin tells you to buy at this price, tells you to have a stop loss at this price, and for things I can't really discuss, like it's usually up to the user discretion to take a profit, and I tell them what that is, and so usually it's just a sign of weakness, right? So so that's how I play it out. But usually within the hour, I make the trades, and I've made probably about 60, 70 trades now, and it's up. Like I said, I was up 80% last week, and that's part of it. And so people are surprised, and I do that for 2 reasons. One, to show you and prove to you that my bots are working, and 2, that I'm not trying to scam you or nothing like that. I'm using my own money that you see in real time. So I'm actually thinking about using it for a trading challenge at some point, but we'll see. Not really part of my priorities right now. Anyway, the 2-week is still under this action, this bar right here. It was very, very close. I'd say on the weekly, it's pretty much like a equal. And so I guess that is very, very, very close. So it basically touched right up there and met the price action from a month ago. So we already, including the current price action, we are above the FTX fallout, and this is one thing that people. We'll go into like bullish and bearish theses, but first we'll go into like the denial phases, right? So like obviously a lot of people are already euphoric about this, which is problematic, and so from a bear denial perspective, first, it's one of those things like people see a big price candle like this and they immediately think, well, all right, we have to go bearish now. But that is why we had the squeeze in the first place. We had too many shorts. It was one of the most highest liquidated weeks for shorts ever. And that's one reason is because we thought the price action was going to go down and it didn't, And so you can't just have that mindset. Like I know guys that think that not only is Bitcoin going to go down 50 more percent, but they think the stocks are going to go down 50 more percent, and they have like, again, that is a valid response. I'm not saying you can't have that. You can think anything that you want, but the prospect of how they get to that is based off of some sort of conspiracy theory or some sort of thing, right? People are talking about Capo or whatever. I'm not thinking of him right now. That's not the guy I was thinking about. But however, a lot of people just have very unreasonable approaches to it. It's not very objectifiable, and it's based off. You can tell their feelings are into their identity is fixed into their tweets and their responses, and that alone is very problematic. So, um, but as far as like bear denials, like there's a lot of bears in denial right now, and that's it's sad to see on either side of the fence. To be honest, one reason people think that this isn't valid is because it didn't make a higher high. Technically, it met the high, and I'm just like, that's bullcrap in my opinion. But again, that's so subjective. Like, is this a higher high? Because now you have this one. Is this even counted as a high because you have this here? See what I'm saying? Like, you got a bunch of these hills and valleys, so to speak. Well, where do you draw the line? So it's subjective because subconsciously they want price to go back down. And so now those bears are stuck in a situation, and bulls are too. We're stuck in a situation, is this going to go higher or not? And so people think this is going to go lower, but guess what? Doesn't have to. Historically, tends to not. Another thing I want to look at, I'm going to go ahead and light up this 100 EMA, and I'm going to go ahead and change this to 200. And so not a big EMA person in this regard, but I do want to look at a few different things. So right now, we are currently at the 200 EMA. So this is worth bringing into the attention. And let's see if I can kind of zoom this out a little bit. We'll get rid of this too. Just get rid of the noise and get rid of the wedges too. So we are at 200 EMA. Now, we have broken that every time on the bear market. So we are at a good confluence point here. If we hold above this line, this is it's not historically a good time to short, or a long rather, in the past 18 months. But what you can consider here is you could have just longed this, and this is dumb, I know, but hear me out. You could have longed at the break, right? And then maybe put your stop wherever, that doesn't matter for this and did something like this. And then when it broke below the 200 EMA, then you close that long. And so in this particular case, you would have lost about 60% of one position, whatever risk that was, right? You go up here, you have another one. Wait for the candle close. Put your stop there, or you could have put like, here's your order block, right? And so you would have put your stop like somewhere right around here. And so get rid of this. And then once it breaks below, you get stopped out. You lost half of that, right? So that's 2 tries and 2 strikes, right? And so now you have this, and we have the same thing again. So what I'm trying to say is that I think it's okay to long here, based off of this 200 EMA perspective. Again, I know 200 EMA is a little bit of a weak perspective, but it does play into this. You can only cross this so many times. So we can look, let's look at the bear market down here. And again, not the best scenario, but this only happened once, right? So we got, this was the bear market, right? We had a big downtrend. We had a price action. Let's go to the Brave new chart because I think this will help. This has a longer price, so this will give us more data. So same scenario, right? We broke it, went above. Broke it, went above. Broke it, went above. Went down again. And so we tried one time. Let's just say 2, 3, 4 times. So let's say you tried 4 times, you got stopped out 5 trades. So what? So what? You know why? Because the 5th trade worked. And when you did this, let's say here's your stop, and you could have had a very big run up. 10R is not really that good on this high time frame, but you would have added more risk probably, right? This is where I would talk about more of a long-term spot portfolio. For me, it's 25% of my whole entire portfolio. 25%. So if I would have got 10R in this case, that would have got me a 2.5x on top of my portfolio. So if I put in 100, if my portfolio is 100 grand, I would have made 250, and that doesn't even include the 100 grand that I had. So that's power in my opinion. And so I don't want you to exclude this. And so let's look at it again. If we wanted to short this, this is pretty much a dud. This was a dud to long, bad. This was okay for the COVID crash. I tend to be much more restrictive on COVID thesis trades because that was a very hard time for a lot of people. And so, in hindsight, even that wasn't the best trade, but it was much more of a trade to get the heck out of the markets. And so we went ahead and had this here. So again, 1, 2, or if we go for longs again, we had one try, fail, 2 tries. We could go here, 3 tries, 4th try. And so on the 4th try, it was valid. So again, let's put our stop here. For me, generally, I'm putting the stop losses a little bit subjective, and it's easy to say in hindsight, right? But as long as I think a good way to have it is either one considerable candle that's below the 200, so usually it's the impulse above the EMA, or you could have also put it down here, just to give you enough flexibility, right? And so we can just keep it there, I think. And as we know, this was the major run up of all run ups. And so, there was a divergence on higher time frame, so we could have placed it basically. So let's just be conservative, place it down here, 26R, right? And so again, that's a spot portfolio, and so what I do is I don't. That's not for leverage. I just take the spot that I have, and then I just do it. So, you have the 26R for that, and so. I would have had 25% of my portfolio, and it did 6%. So that would have been 1.5x. So again, another perspective of that. So we have the same thing again. Long once. This did okay, but this was part of the bull market still, so that doesn't necessarily count. Here we had 1 try, 2 tries, we're on the 3rd try, and so this is getting a little difficult to interpret. We have the current rejection. We actually have the rejection on the Brave new coin. We don't have it. We have a break on the KuCoin chart, and so that's something to keep in mind. Partly because the Brave new coin is it doesn't do per second data. It does daily. So you will see this at the end of the day on the Brave coin chart, where we have this break. And so for me personally, again, it's subjective, but I would probably somewhere around here I think would be okay. And again, and you could even target this previous reclaim. And the reason I say that is because the stop loss doesn't necessarily matter on here, because the whole point is if it closes below the 200 EMA, then that is worth closing. So if it comes down here, then you close. End of story. But you got to wait to the end of the day. So that's that regard. Some other things that make me a little more bullish is that we've reclaimed this area on the 2-week as well. We've closed above this. And so one thing that we need to keep in mind is that this was holding prior to the FTX event. And so a lot of people are looking at COVID as like an anomaly, right? It should not have happened, so we need to retest it in order for it to happen again. But they don't take the same thesis here. It's the same thing. FTX should not happen in the same way that the COVID crash should not have happened, technically. But that's not how black swan events work. They have to play into it because all candles are based off market behavior. And so we can kind of look at this and we can say, hey, we reclaimed the area that took us down. And so this, in my opinion, is considered a valid support structure, or a reclaim structure, I should say. So this is a reclaim of the monthly. And so this is how I look at this. Until otherwise, this is how I look at it. I'm super long in this regard. Again, not the best R, but we're not talking about R values necessarily on this particular chart. I'm looking at a major reclaim of this level, and so that's very important. Another thing that I have seen, let's go ahead and go back to the Brave New Coin as well, because I think that's where I found it. Again, 2 week. We broke below the 200 EMA, and now we crossed above it. So same thing. We had the retest, breakdown, and then relaunch of that. So that's worth considering. I am, again, much more bullish than someone here, and I'm not bullish in the sense that I'm dumb. I'm a bull, like I'm strategically bullish on this for lots of reasons, and that's one of those reasons. So again, we broke the wedge, got the buy signal, and again, I want to look at, again, this is historic. I'll put it on logarithmic to get a better view. Historic price action. This is the biggest Brave New Coin is the biggest Bitcoin chart. We had this one so far. It is the bottom, like the bottom candle. Here we had wasn't quite the top, but it was very close, and so that is worth taking into effect and consideration. This one was not valid long term, but we did have the strike down, but I would consider that invalid for this particular case. And we had one here that was kind of somewhat valid because it did give us a sideways price action, but we have no buy signals. So I'm not saying that this makes it all of a sudden correct, but this is literally the only buy signal that I've ever had on the chart for this, and so I'm going to take it very seriously. So that's one reason to let it play out. On the 1 week, we also had this, and we can kind of analyze this as well. Again, so far, bottom, we had the top from there. This ended up being a sellish. That's not a really word. Ended up selling, but we retested there, so I would consider that valid as well. This one got bought, so this is also valid. This one was a bearish divergence, and so typically what I've been telling a lot of people, and especially my Apex members, I tell them how to play this as well. When you have a liquidity signal, they get access to all my scripts. When you get a script with liquidity, that tends to be valid, and that technically was. This is where this gets kind of complicated. I did not have the script at this point, but these were all invalidated, and so again, no buy signal since then. And so this is where I'm looking into this as something worth talking about. So that's kind of how I view it. And so that's why I'm a little more bullish in this regard, because again, we'll go back to the 1 week, right? And I'm talking about this too long, but and we'll go back to logarithmic. So every break that we've had, every single break that we've had above 200 EMA has been the bottom. So here, this, depending on how you want to interpret this broke below. You could also say that if it did break below and it retested, that could be valid. This technically did break below, and so that's where so the thesis is that once it breaks below the 200 EMA and then it crosses back above it on the weekly, that is where you start longing, and it did currently right here. So that is the bottom. This is the bottom candle. It wasn't the bottom wick, but it was the bottom candle. And so we could probably long here if you want to wait to the end of the week. So you had some stressful times there, but it ended up being okay. Here's the one from 2018. We had a break below. You would not buy this, but you would buy this. And so that's where that plays into effect. So even though you have an impulse like we do now, it doesn't mean you can't buy it, right? So that ended up being the bottom-ish. It wasn't this. This was still the bottom in comparison to this candle, and then looking at this candle again, the break above, that was the low, and so now we have the same thing, but we're not quite above that. We are above it on the 2 weeks, so that's a little bit of a challenge, right? This is a much deeper consideration and range versus the 2 week, but I still think it's worth talking about on the 2 week, because by the time you get to 25,000. The 2 week is already going to be way far away to take advantage of right now, or even like I did at 16.5. So I did a lot of spectacle analysis there, but that's a consideration. Let's go back to the regular chart, and we'll go to the daily. And so that was the bull case on the high time frame. But what about what about this time frame, right? So another thing is we got to break this range. Nothing about this technically. If you want to look at this from a bullish side, you want to look at this from a momentum based side. And so right now we've got the momentum is clearly in the bull's favor. The RSI is finding no breaks of anything in this regard. I think even on the weekly, it's above the 50. So that's one thing to consider. Bullish consolidation. Again, that's designed to be bullish for a long time. It's if it stays this way, it's going to be bullish for 7 more weeks. Because 40, actually 6 more weeks. So because of the calculations on the 42%. If you go here, we have the full trend thus far. And so right now I understand the need to want to be bearish. Like you were used to bear market, and this is where bear market PSD comes into play. You want to short something that you are conditioned for the past 18 months to short something that has pumped and it has worked, and it has worked for this whole time, right? But it may not in this case. It's going to be to a point, I think Haskell said this, it was to a point where you're not going to no longer get rewarded for doing the things that you've been doing. And so that plays into it. Now you're going to get punished for doing the same things that you used to. You're going to be left behind in that regard. So it's worth mentioning. But we did a reclaim of this area, and so this is one reason I'm looking at the bullish scenario. Until it breaks below this range, I'm still bullish. Even if it comes down here, still bullish. I don't have any reason to think so. We went up from basically 15,000 to 21,000 in a very short time. So I think the reason people are being upset about this or being kind of braggarts about this with some swagger is this caught people really fast. And when it catches people really fast, it catches them off guard. When it catches them off guard, they get offensive or defensive. And so that's the thing. People have not been paying attention to this price action because we dropped down and we kind of had nothing we flatlined for probably 2 months, right? And so people weren't paying attention, and so they missed out, and that's perfectly okay. Like I said, I was able to take advantage of it, and at 16.5, and so I mean that's just it is what it is. I could be wrong at another time, and that's completely just how it is too. So, so for the bear thesis, even though I don't agree with the higher high scenario, we still have to look at it from a daily range. We're below this range, and so we need to reclaim this to get higher. A lot of people, respectively, look at it from the weekly perspective. We want to be able to reclaim this range, and so if it kind of reclaims this area, then that's a good sign to be bullish again. Some people even kind of look at this range, and I don't necessarily agree with that, but I can see why they do, because this is the previous order block, right? So above the 24.2 would be good, but that also goes with the 2-week scenario of buying above the 200 EMA. So I think that's a completely, I think that's a good analysis in my opinion, but not one I subscribe to. Again, from the bullish theses that I've given you. All right, so we can kind of go to Ethereum. I'm kind of going a little longer than I want, but that's completely okay. We're going to get rid of this. And then we'll go to the 2-week like we did before. As I've mentioned before in previous observations videos, we have a retest point. Let's just go to a different chart here. Kind of clean that up. All right, so I've mentioned this. We didn't have the falling wedge like we did on Bitcoin, but we have two things. We kind of have a rounded retest, which is an Adam and Eve pattern. This is very classic, and this will show better on the weekly chart. But I do want to mention this here first. This is a kind of a dead trend for Aroon, which you don't want to necessarily see this in particular. It's not overly a bad sign, but what this means is that the trend is having difficulty trying to form. And when that happens, usually one trend will form over the other, and it'll last a long time. We've not had this on the 2-week, so this is a little bit historic in that regard. We are still below the 50 on this, so nothing much to say. Other than this is kind of a rounded retest. We had, again, the bullish price action, but no new high for alts. So again, could have some strength from Bitcoin. here you can kind of see the rounded retest a little more clearly. Um, you kind of have the atom pattern here and the Eve kind of curve pattern right here. So again, this is pretty textbook. There's these things that are textbook that are just staring at us in the face, right? And I don't see. It's so funny how people are just in denial for months and months and months, and then they finally see it after it's too freaking late. You know, it's like, well, you had the chance to see it, you had plenty of time, and people were telling you about it. So, it's just it's frustrating at times, but again, um, it is what it is. So, no liquidity on this, so we'll go ahead and go to the daily, I think, because that's pretty much all the point I have on the weekly. The price action here is full trend bull. Still have the overbought territory, and that's one of those things. It doesn't necessarily matter until it goes back below. From what I've seen, it is, in my opinion, it is a good take profit area when you have a long, and let's say you long down here, and it goes in that regard. Let's say you just for whatever reason you just long this, right? Once you get above there, you could have taken profit like right here. And so I don't think that's a bad play. I think especially if you're kind of a newer trader, I think that's a pretty safe play. It's one of those things too, is like in my opinion, by now I would have had long-term spot exposure on Ethereum. Just for the fact that it's probably, I'm not even saying it's not going to go down. It's like, this is a good relative price. It is. If you go back to the 2 week, like, look how far that we've dropped. This is a bargain in comparison to what we've experienced. Before that we were at 74%. The low for this was 77%, and so like, yeah, it can go lower. Of course it can, but long term, this is a good buy. And so if it continues to go up, then you've made your money. If it goes down at a certain point, you can just sell it. Let's just go ahead and run the 200 EMA thesis. Nothing here on, still new enough. But again, we have this. We don't have much price data with this, unfortunately. I think, I don't know why I did that. Coinbase. Yes, it gives us a little more data here, but not much. So we had a break above, and had a second try here, third try here. Now we're not quite above the fourth one yet. So overall, nothing instinctively okay, but I think we know intuitively that the 200 EMA is a good opportunity long term to buy. And so I'm not necessarily even saying this from a trader's perspective, almost like an investing perspective, but not investing, because I can't really share that advice or whatever. It's just one of those things that this long term, this is good spot exposure. Historically, it's been for almost every asset, everyone. And so that's the thing. Like, if you get a chance to do that, whether it's here or like, let's just go to the S&P 500. And so this is something I've had planned out here. A lot of people think that we're going to go back down here, and I'm just like, well, whatever. I guess we'll find out. But this has respected the 200 EMA, and so I've had this plan. We're breaking above that. We still have the whole week to figure that out. But let's go ahead and again look at the logarithmic chart. And this is, if you've seen my videos, I'll try to link it as below. But I have a video called 3 trading strategies that 99% of people won't do, and this is one of them, because it's just so freaking easy, and it gives you the ability to to hold a lot of money, and you don't have to even trade it necessarily. This works especially if you have a family, or if you have a busy lifestyle, or you have another job. Like, you can just don't let it worry you. You don't, the full time. Like, I trade crypto full time, but it's not like, it's not all, it's not all smiles. Like, you spend more time in front of the charts than you really want to, first of all. And two, if you're not emotionally, if you haven't mastered this emotionally, forget about being a good trader or not. To me, it's the emotion aspect. If you don't have your emotions in check, you are going to fail at this, because you're going to look at too many things, because you have too much time on the charts now. You're also going to be more susceptible to new stuff, which could be spam. So that's the thing. Like, people are tempted more because they're like, oh, like, I know how to do this. I'm full time, right? So you can just make more money and do anything. Well, you can't. Some things don't always apply. You need to have a consistent strategy. And so this, for me, operates as a hedge because I can kind of work like this. 200 EMA broke below, went ahead and that was the low for since COVID crash. This one broke below with a wick, and that would still count in my opinion. And it broke above that, so that was the low until the 18th. It did go lower than that, but that's it is what it is. This one touched it, so this one counts as well. Here we had a little bit of trouble. We had one uptick, and then the second one ended up being okay, and so that's somewhat similar to here, but this I think was only one. But that was one there. We had this was a big cluster here. We had one break below. And this one didn't go above, so this broke above, broke below, broke above. But this was like 2010, guys, right? So we had the breakdown here. This was also the financial crash as well, so we had a little bit of difficulty getting this back up and running. But again, let's say let's say you would buy above the 200 EMA. You would have got one here. Tried again here. Second time, fail. Third time, and I would say that's a fail. Fourth time fail, fifth time fail, sixth time success. And so this would have netted you pretty much the bottom area until the next time that this happened, which you didn't even have to sell this because it didn't go below, right? And so you could have bought more here because it didn't sell below, and so you could have lasted until the COVID crash, basically. And that's since the financial crisis, and some of you guys were in freaking diapers by then, probably. So just to keep mindful of how few times this actually happens. And then 2001, right? So that was part of what we just talked about. So or no, it wasn't. That was right here. So again, this happened. Up one, fail. Second time, let's just say fail just for the record, and then that was a success. So and that was a regular thing. I think this was the 2000. This was the 9/11 era. This was the financial crisis era. And then again, look. We're going back to like the 80s, right? So this was good, and see how often this occurred. A little choppy here, but again, you're talking 50 years ago, right? So if we move back to modern day, most of the time the 200 EMA ends up being a good play. And so I just want to kind of be mindful of that, right? So I kind of went into a different direction for this video, but that's something I want you guys to keep in mind. We'll talk very briefly about some ETH stuff on the daily. Again, 200 EMA, it broke above it. So this is where I don't have any reason to be bearish right now because we broke above a major trend line. Again, we broke a below here. We did break a below twice here, but look at, where was it at? Where was was this the top? I guess it was, yeah. I guess it would because, yeah, duh. Do I have this on? Yeah, that's why I couldn't see it. It was on logarithmic. So, but if you look right here, since COVID, we had one cross, 2, 3, 4, 5, 6, and this is number 7. So, and you take out the bearish one, so 1, 2, 3. So you've had 4 chances to long the 200 EMA in this regard, and so the first time that you got it would have netted you from here to here about 10x, right? So 977. And so, you know what? Let's just go ahead and do the math. So let's just say you had $10,000. And I say 10,000 because most people that are in the space have at least that much. And if you don't, that's okay. But I think $10,000 is a good, respectable number that most people have. That's just a good numerical value. And so, as I said with this one, it was 900, almost 10x. So we'll just say times 9.7. And so this, if I can do my calculator right, I already know this in my head, but I want to put it in my calculator. So we're already at $97,000 with this alone. And this is not even including if you would have bought here. If you would have bought here. For any chart, really, if you get above 20x, you should just probably take it, in my opinion. But let's just say you don't, right? And so this might end up being about 20. So you don't buy this, you buy here, and you sell at the break. Let's just say you don't make anything, right? 2% is nothing. So you break above here, and you go here. So now you got another 72%, right? So times 1.72. So now you're at $166,000. You long this, that was a break-even fail. So at this point, you did 4 trades, and you made $166,000 over not even 2 years, or a little slightly over 2 years, and that's not bad. That's only for $10,000, right? So like if you had, if you had 50,000, well, that's $834,000. That's not nothing to shy away from. I want people to realize that, because people are too focused to make too much money too fast, and that is possible in this market. But don't shy away from this, right? Like if you have $100,000 at your disposal, I think this is worth considering to put like 25% into this, because if you did that, that would give you $417,000. That would have gave you 4x over what you started with at that time, and you didn't even have to. You barely had to look at it, right? And I'm really being dead serious about this. This is something that most people really ignore, and I don't see why, because this is very effective. It's not fancy. It sounds like a noob thing, but so what? I make money, and or this makes you money, and for them, they're still butthurt about the previous bullish candle or run that we had or whatever. So it's worth considering. That's just for Ethereum, right? I think Bitcoin was even more. And so I think I'll do this and then I'll end the video. But again, we had this, for example. Let's just say we did the run up from there, started out here. You had 385. So you just take the same the same $10,000. Now you're at 38, and then this would have gotten you probably a break even. Let's see, this would have got you a slight loss. So let's just say we'll take 2% off that. You're at 37.7. This would have tried, you would have failed, tried and failed. So 4x isn't the best, but again, what have you made in this time span? And so if you have not made 4x, then this is a better opportunity for you. And then currently, this is only 135% above that current price action. So that's actually outperforming almost by threefold what is going on currently. And again, I want to ask you, since that time, how much money have you made? Have you made 4x since then? Some of you have, I'm sure, but most of you probably haven't. And so that is worth considering. And just again, just as one of those things, if it goes up, like with Ethereum, if it goes up 20%, that's probably worth taking. Most of the time when I get to an asset to 30x, and I've had some go 30x, it's time to take profits regardless of the price, in my opinion. So anyway, that's it. I went way too long on this. I went a little bit different of a scenario with this, but I hope you enjoyed it. Let me know what you think, and I'll see you next time.